Hey YouTube, and welcome back to my channel. We have a little bit of a new setup here. I thought, why not? Hopefully soon I won't even be filming videos in this house anymore. So I wanted something to go with the change that we've been feeling on this channel for the past few months now, which is a lot less living in Italy as a student and more adulting in Italy as a young adult. And so today I'm coming at you guys with a personal finance / financial video, because some of you guys have asked me on Instagram, for example, about, the fact that the market is crashing and we all invested our money in it. Quick disclaimer in this video, I am not a professional financial advisor and I'm not giving you guys financial advice. I'm just giving you guys my own opinion and my own strategy based on what is happening in the market. I'm a regular schmegular girl with a little bit of an economic background, and I'm good at managing my own money, but I don't manage other people's money. So that being said, if you want specific advice on your specific situation, be sure to try to seek out professional financial help. This video is just my opinion. The current market crash isn't important just to people that have invested in stocks and bonds and direct financial instruments, but also just about anybody that has any sort of financing or is trying to work for any company that has any type of financing, which is essentially all of them. The way the market is moving, the way interest rates are reacting, the amount of available financing that is available to companies and people is important in everybody's lives. If a company isn't able to finance their activities, that also means that they're not going to be able to employ anybody, which means that you as a person is not going to have a job. So everybody should be interested in what is going on the financial markets right now during this market crash and the looming recession that we've all been talking about for the past 2 years. Seems that it is finally here. We're not exactly in a recession just yet, because a recession is 3 consecutive terms of, is it 3 consecutive terms or 3 consecutive months? I'm gonna have to look that up again. It is a sustained period of lower prices, a sustained period of a bear market, and we're not quite there yet, although we're getting pretty close. You've invested money in the stock market, you're probably freaking out because you're watching every day as your portfolio goes more and more and more and more and more in the red. I personally have one fact that is guiding all of my financial decisions when it comes to my stocks, and it is the fact that the US economy has rebounded from every single recession every single time in its history. We can talk about assumptions and we can talk about market conditions and we can talk about all sorts of other things, but the fact remains that in economics, in finance, we all know that these things are cyclical. Just as the economy expands, there are times when it's going to contract and we will go into a recession. The economic cycle is a cycle, and so it was expected that this was going to happen eventually. We were actually long overdue for another economic crisis. If you watch a lot of videos on personal finance YouTube, you would have known that everybody's been talking about this for literally the last 3 years, how to prepare for the next economic crisis. The point is, now that it's here, where it's like, okay, so what's the strategy going forward? Now, me personally, a lot of you might have known that I bought a house literally the week before the market started seriously crashing. It was already losing some value, but whatever. So I bought a house, and in order to make sure that I had all the liquidity needed to go through the closing costs and the first initial costs of getting into the house, I had to sell a lot of my stocks. I needed that liquidity. I needed to move the money from stocks and financial instruments to cash to pay for the real estate. So that being said, I have very few stocks still in my portfolio, and they're all obviously losing value, but even despite that, I'm going to leave them alone, because I know that it might be 1 year, it might be 3 years, it might be 4 years, but the economy is going to rebound, and in the long run, in 10 years time, I know that those same financial instruments, they're going to increase in value. I'm going to make a capital gain on them in the long run. Luckily, I'm not 60 years old, I'm not 70 years old, I don't need that money right away. I have plenty of time in my time horizon to wait for the prices to come back up, and they will. I'm pretty certain of it, because the only way that they won't is if the entire financial market completely crashes, and in that case, I mean, we're gonna have a lot more problems to worry about than if our investments went up or down. We're gonna be like bartering beans, because money won't even have a value anymore. It will literally be the end of the world. That said, I'm not panic selling my stocks. It's one of the first rules that the professionals actually tell you: do not panic sell. And the last step / principle that I follow to make money in the stock market and not lose money is not to panic sell. This is kind of the other half. So you buy low and you sell high, but what happens when you buy and the price keeps dropping? You hold that. I mean, first of all, we already said that you're not going to be investing in things that you don't understand, right? You're not going to be investing in companies that you don't believe in, right? So if you invested in a solid company and you actually did your research, like in step 2, the price drop is temporary. If the company has longevity, if you checked the indicators, if you trust the company, the price will go back up. It might not go back to up tomorrow. It might not go back up next week. It may not even go up next month, but in the long run, it'll go up, especially if it's following the trend of the rest of the stock market. If you invested correctly, price drops shouldn't scare you. You should know that in the long run, smart investments always make money. I don't want to say always, because there's always that 1% chance that the world economy might explode. Just because prices are going down doesn't mean you need to sell. I think that people fall into 2 groups. There are people like me who don't have a lot of extra liquidity lying around, and there are people that do. For the people that don't have a lot of extra liquidity lying around, what I'm doing is I'm leaving the investments that I already made alone, and going forward, the budget that I used to put towards investing every month, I'm putting it towards my emergency fund to make sure my emergency fund is even stronger. Being in Italy, I'm sure that all of the economic downfall will hit really hard here. So that being said, I'm moving away from contributing in the market and going more towards enlarging my emergency fund, because I don't know what could happen, and I need to have a backup plan. I need to have a safety net. But if I had an extremely large emergency fund, if I had more money at my disposition and I didn't have to save it all, in that case, I would be buying so many stocks right now, you guys. There are so many amazing deals right now. Stocks like Tesla, Facebook, Netflix, even Netflix, that you would have thought maybe since we're all at home watching Netflix now, the stock price would have went up. It hasn't actually. It's been pretty erratic. All of these stocks that usually sell at a really high premium, that are usually very expensive, have lost a lot of their value. So it would be a great time, if you believe in their business plan, if you believe in their longevity, it would be a great time to buy up some stocks like those. They're a lot cheaper right now. I think that either you're in the base where you're building up your emergency fund, and you're strengthening your emergency fund. Like my emergency fund, like I've already said in past videos, I don't really follow the whole 3 months expenses thing, but for me, I like to have at least 10K just sitting there just in case, because you never know. And since I'm buying the house, I have less than 10K in that fund right now, and I'm trying to get back to that point, because you just don't know what's gonna happen. Otherwise, if I hit the 10K and we're still in a market downturn, at that point, I would start buying up the stocks that I've always dreamed of wanting to buy, but honestly, they were way out of my price range. That said, my strategy going forward is not panic selling, building up my emergency fund, and then eventually buying the discounted stocks. On the one hand, I'm of course nervous. Who couldn't be nervous? I mean, we lived through the 2008 crisis, and I mean, my family in particular lost just about everything. Our house was foreclosed. My stepdad lost his job. It was very, very difficult, and I still live with the lessons from that period in time. But at the same time, I know that some of the greatest investors, some of the greatest fortunes were made in market down times like these. So on the one hand, I'm nervous for the future and how it could impact me and my loved ones. But on the other hand, I see this time as an amazing opportunity, not just in the market, but in life in general, in working in general. As you guys can see, I'm making a lot more content in this period. I'm changing up my style, my aesthetic. I feel like this time could be a great time for personal growth. So That being said, if you guys feel like sharing your strategy on how you're riding out this economic crisis, this economic crash, feel free to let me know in the comments section down below. As always, be sure to like and subscribe if you haven't already, and I will see you guys in my next one.